Good morning, everyone. Thank you very much for joining us on today's episode of True Potential's Money Markets. In today's video, we would like to review asset market performance from last week and what that means for you. Last week, we saw positive performance from both equity and fixed income markets. Looking at equity markets to begin with, we saw global equities return a positive return of plus 5.5%, and that was led by the US. Looking at fixed income markets, they produced a positive return at about 2%, and there wasn't much difference when we looked regionally from places like the US and also the UK. Now, why have we actually seen this positive performance? Well, there's two main reasons. Last week, we had major developed market central banks making interest rate decisions. So that's from the likes of the Bank of England, the Federal Reserve in the US, the Bank of Japan, and the European Central Bank. Now, they all made the decision to pause on interest rates, so have decided not to take interest rates higher from their current levels. And the second reason is why they've come to that decision. Well, we're starting to see a slowing in economic data. An example of that data that we're seeing was Friday's US employment report. The employment report, although positive, so the US is still net adding jobs to its economies, is starting to slow, and central banks are starting to reflect on this slower data and also acknowledging previous interest rate decisions that are starting to take their effect and slow the economy. So because of that, markets have been able to price in the possibility of interest rates moving lower from here as central banks pivot from their hawkish or more restrictive policy to less restrictive policy because of the disinflation forces that we have witnessed. Thank you for watching this video, and we'll catch you in tomorrow's episode.